Share Navigator, just a quick update on a trade we just did. It's an earnings play. We've placed it there a half an hour before the market's closed. Johnson and Johnson are due to announce their earnings before the market tomorrow. So this is the last opportunity to play this trade. So it's an earnings play. We're trying to take advantage of implied volatility increasing after earnings tomorrow. Implied volatility should be sucked out of the option, which means that the options we're selling should reduce in value on the implied volatility side. So we did a short strangle, which basically means if you look at the chart here, we want the shares to trade somewhere between 94 and 106 and we'll be in profit. And to be more precise, it's 94.13 and 105.87. Our probability of success in this trade is over 70%. And at the moment, the shares are trading in and around $100. So the shares can afford to move 5% either way after earnings, and we'll still make a profit on this particular trade. We're going to make $87 per contract. That's what we received. We put in an order to sell 5 contracts. We only actually got filled on 4. So bottom line is we wanted to trade somewhere between these two. We will manage this trade during the day tomorrow after earnings. As volatility dries up and the shares move in one particular direction, we'll actually take one side of the trade off and let the other trade ride itself out over the next couple of days, and then we'll close it. Our aim is to actually take 50% profit. So we're probably, if we get to sell the 5 contracts, we're going to take about $250 in profit over the next 4 to 5 days. That's the target anyway. So just to give you an idea, this is the trade we placed. I'll just give you, trade history up here. You can see here 2 parts of the trade. We basically sold a $95 put and sold a $105 call. We've only got filled on 4 and we're still waiting on 1, and we got 89 cents in each one of those. Give you an idea of the volatility in the charts. We're looking at a chart here, Johnson and Johnson. You can see here implied volatility. So it's not particularly high. It spiked back here in October of last year, went up over 20%. But you know, it's generally range bound somewhere between 12.5% and 17.5%, and it's closer to the 17.5%. So you could see this little kick up here today in implied volatility. It even got more so towards the end of the day, and that's when the opportunity created itself. What we're trying to do now is, after the earnings announcement tomorrow, implied volatility be sucked out of the options, and we'll again get to buy them back cheaper if the share price hasn't, if the shares haven't moved in one direction too much or another. Okay, that's a quick update on the trade we just placed. Johnson and Johnson, short strangle. It's an earnings play. Stay tuned over the next few days to see how that trade gets on.